S. Krishnan, MD and CEO at Tamilnad Mercantile Bank, joins in on the show to talk about their numbers now. Mr. Krishnan, morning. Your loan growth, as I see it, within the banking sector is now in the late teens. Your growth comes in at 9%, which is relatively muted. Is this a conscious call? What's caused this?
See, I will not call it as growth is muted. In fact, if you look into my advances growth, it's around 9% year on year. And I have to say that basically we focus on the RAM segment. The RAM segment growth, the RAM segment mixture, if you look into it, is 89% and only about 11% is the corporate book. Having said that, I will also request you to refer, I think I will give the statistics to you, how I have grown in different segments. In the retail sector, I have grown about 16% year on year. The agriculture, I have grown around 13%, and MSME is moderately at 7%. So if I look into the overall RAM segment, I have grown around 11.38%. The corporate book has come down. That is a conscious call that has been taken by the bank, that we will be selective in corporate sector and we will be continuing to focus only on the RAM segment. So when I look into the RAM segment growth, the RAM segment growth is good. As I said, retail with 16 and agriculture at 13, and MSME is also reasonably good. So I don't say that it is muted, there is a growth. Of course, we will also be further accelerating in this quarter, which will result in the overall guidance, what I said, that I will be growing around 10 to 12% in the year. Hopefully that we will be able to achieve, because the overall advance already we have achieved around 9%.
Right. And in fact, there is a degrowth in the entire corporate book. So what is the plan when it comes to that? And is it a plan to run down the corporate book going forward?
No, there is no plan to run down the corporate book. I used to always say that it is not I have closed the doors for the corporate. I am choosy, I am selective. As you know that as and when the capacity increases, there is a demand for good corporates. Definitely, we will also be participating, commensurate with the size of our bank. So we are not totally telling that I have closed the doors of the corporates. We will be selectively increasing it. We will be concentrating more on the mid-corporate.
We have heard about a certain kind of mispricing that is also taking place with respect to the corporate. What do you have to say on that?
Yeah, that is one of the reasons. See, when you talk of the corporate sector, if I look as a large corporate, the large corporate is driven by a consortium of banks, or there will be multiple bankers, and each bank's cost factor differs. So the pricing also goes, and there are some price wars also. We are more concerned on protecting and enhancing the value of the stakeholders. So we are very selective. As you rightly said, that could be one of the reasons. But mostly I look for a good corporate credit where the rating is good, where I have proper security and the business which I understand.
Now, from the government to the RBI, we've been hearing about the need for deposit rates to go up, something that you have also acknowledged. But if I were to look at your book, NIMs are strong at 4.5%. Where are they headed?
See, in fact, last time also I told, but we could. Maintaining the 4.5 is a big challenge, because it is one of the good NIM. With these market conditions, maintaining that will be a little difficult. Last quarter also I said, but we were able to manage and marginally increase the NIM in the Q3 over Q2. So all the efforts will be made, but maintaining that will be difficult. What I gave the guidance to the market was that it will be 4+. So definitely we will be like that.
Right. Now, on your deposit side, I just wanted to understand the overall deposits have been flat. So what is the outlook there? What is the challenge really that's emerging? Is it largely competition that's playing out, Mr. Krishna?
I have very recently increased the deposit rate. My ALCO met very recently, and it has increased the deposit rate. Going forward, we will be able to. As I said, it was a conscious call that to the extent possible, I want to utilize the funds. And if you look into the abroad, basically they mobilize the deposits only when they have firmed up the deployment, the matching funds. So almost like that, we have been working. And thereby, if you look into my CD ratio, is also one of the good at 80.11.
So give us a bigger picture as to how you're seeing, the progress for the bank shaping up. How do you think your loan growth, your NPAs, your cost to income, credit costs, etc., all of these parameters could shape up in the long haul?
See, the book is expected to grow year on year by around 10 to 12%. That is what I expect. And in that, we will be mostly doing on the CASA. We will do more on the CASA, which will result in my increasing the profitability, reducing this. And then as far as the asset quality is concerned, I will be definitely maintaining my gross below 2 and the net below 1. That is what we will be doing. And expect the cost income ratio should be around 41, 42, like that. We have brought out this time, and we will be maintaining around that in the near term. Longer term, probably we may go below 40. That is what ROA, yes, we have reached 2, and we will be trying to maintain, which will be around 1.8 to 2, something like that. We will be able to do. These are some broad parameters which I can give. In fact, these guidance are I had given earlier also, almost at in line with that. With this performance, we have slightly modified upward some of the parameters.
Right. Okay, great to have you on the show. Thank you so much for highlighting all that the quarter was and what you intend to do going forward.